There's a very real possibility that the market is going to crash in the next 1 to 2 years. So wouldn't it be nice to make money when the market goes down instead of seeing all your investments drop in price? Did you know there's a technique out there called shorting which allows you to make money when assets go down? In this video, I'm going to teach you everything you need to know about shorting a stock and how you can make money when the market drops.
Is it Brian? Yes.
Hi, I'm Giannino. I teach you how to make money, grow money, and invest money. So please like this video and subscribe to the channel. I would greatly appreciate it. I'm super excited to talk about shorting and how to do it because it's a very unique topic not many people understand. And if you know how to short, it also lets you make money on the downside, which is really attractive to people that only know how to buy a stock. So in this video, I will be going over how to short, the risks associated, and most importantly, what is shorting with a pure definition. And that's where I'm going to start with what is short selling or shorting a stock. And the best definition I could find is short selling is the sale of a security which is not owned by the seller, you. And the short seller borrows that stock from the broker, they sell it at the open, and they buy that position later to close it out. And obviously, if I give you a definition, it still can be confusing. So let me give you an example of what it looks like to short, and most importantly, how it's the complete opposite of buying a stock. So when you buy a stock, you're hoping to make money when it goes up. When you short a stock, you're hoping to make money when it goes down. So buying a stock, you own the stock. Shorting a stock, you owe the stock. So you owe the stock to your broker, the person you shorted it from. There's a lot of complications that come from owing something to somebody, including interest on it. Every day you have a short position or you owe money to your broker, they're collecting interest. That's one of the huge downsides of shorting, and that's one of the biggest risks I want to make aware. But how do you make money when the stock drops? How do you make money when you short sell? And let me give you an awesome example of how you can make 30 bucks shorting a stock. So when you go to short a stock, you believe the stock is going to drop. So instead of buying a position with the +1 on your screen, you're going to sell a position, meaning you owe the stock to your broker. When you buy a position, here's what happens. If we bought a $40 stock, $40 would come out of our account to the broker, and in exchange for the $40 we get a stock. And here's what happens when you short. Instead of giving the broker $40, the broker gives you $40 and you give him a stock, but you don't own this stock. That's why you owe it to him. So just summed up, the broker gave you $40 for a stock that you shorted, and you gave him a stock that you don't own. So you have to buy that stock later to basically break even. So this stock that you just bought was trading at $40. And since you shorted it, you want to make money when it drops. So let's say, just for scenario's sake, the stock dropped to $10. Now you bought the stock for $10. Just like every time you buy a stock, you have to give the broker the money it costs to buy that stock. So that $10 is coming out of your account. So $10 goes to the broker and he gives you a stock. You had -1 stocks and he gave you 1 stock. So now you have 0 stocks. So now you basically don't have any positions in the stock. But here's the cool part. You now have $30 in your account because you bought this stock lower than where you sold it. That is shorting in the simplest form I can tell you. You're basically borrowing money from your broker and hoping to buy back that position at a lower price so you can keep as much money as possible from the amount you borrowed. So if you shorted a stock at $40, best case scenario, the stock goes straight to 0. You get to keep all the $40 in your account. How cool is that? But the biggest downfall here is that the most you can make is 100%. But if you are buying a stock, you can make way more than 100%, especially if you hold it long term. Now we will be getting into the reasons why you would short the market and what you're looking for as the trader or the investor. So main reason you're going to short the market is because you think it's going to drop. So obviously, if you think it's going to drop, you want to make money when it goes down. Reasons why you think it could drop is because maybe we're in a bear market. bear markets historically last 3 to 8 months. So that's consistent selling in the market. Meaning if the overall direction is selling, why would you not want to short the market? Because if it's always going down day after day after day, it's better to make money than lose money every day. Because when you're holding stock during that time, you're constantly losing money. So recessions and bear markets are prime places to short. Another great time to short is when stocks are completely overvalued. This could be IPOs, this could be penny stocks that are completely news driven, hype driven. All these stocks could be huge bubbles at times and sink almost instantly 50-80%. That's why shorting is so great, because if you know and do your research and you understand what things are hyped up and what valuations are completely crazy, you can make huge percentage gains from shorting stocks. The last place to short a stock is kind of a long-term play. This is where you could have a company that is strong and completely believed in for decades that is slowly deteriorating from the inside, meaning the revenue is slowly decreasing. Maybe they're cutting their dividends. Think about GE. This stock went from $34 all the way down to about $7, and this took a year and a half. So this was a great stock to short because it constantly was going down for every single month. Those are my 3 best places to short a stock. Just to recap them, you can look towards overvalued stocks. You can look at stocks that are crumbling fundamentally. And lastly, you can look at the overall market and the direction of it. So if we're in a recession or a bear market, great time to short. But I'm not a financial advisor. This isn't financial advice, mostly education. Now let's get into the most interesting part of the video, the pros and the cons of shorting. Because like I said, there are some huge risks with shorting a stock, and I really want to go over them right now. So huge risk number 1 is you're paying an interest rate to borrow money to short the stock. You should know this probably in your life by now, that when you borrow money from someone, they're always going to be asking you for interest. This could be student loans, car loans, mortgage payments, credit card debt. They're always going to be asking you to pay interest on the money you borrowed. Because you're borrowing money from your broker, they also are going to ask you for money. So the interest rate to borrow a stock could be 5 to 30%, and it's mostly dependent on the stock you are shorting. You will find the more popular the stock, the higher the interest is to borrow it, because more people are looking to short that particular stock. And that's where you can get into some trouble trying to short the most popular stocks on the market. Let me give you an example of why shorting can lead to losing all your money and money you don't even have. The $40 stock we used in the example earlier that made you $30, let's say it didn't go down. Let's say it didn't go down for a whole year. Let's say it just stayed at $40. And the borrowing rate, the interest rate for that stock was 30%. So at 1 year of holding the stock, you have to pay 30% in interest. So although nothing happened to the stock, you're at the same price you shorted it at, you owe your broker 30% in interest costs. So now you can see why it's so important that the stock drops as quickly as possible, because if it does not drop quick, you are paying interest over long periods of time, which can really diminish the returns you could have possibly gotten on the stock dropping. And here's the main reason why shorting is probably one of the worst things you can do if you don't understand it, because that $40 stock, if it went up 100%, that $40 into your account is now at 0. So not only have you lost 100% of what you borrowed, but when you buy that stock at $80, you have to pay an extra $40. And most brokers don't let you short what you don't have. So if you have $100 into your account and you short something for $100, you have $200 in your account now, and that 100 is kind of as collateral. So if a stock went from 40 to 80, you'd hopefully have $80 in your account, and you basically get wiped out. You lose everything when the stock goes up 100%. Now let's say the stock goes up 200%. Now if you have $80 in your account and the stock is at $120, you owe the broker $40 of money you do not have. This is where you get into huge trouble. You can owe millions of dollars if you don't know what you're doing when you short a stock. This is why it's so scary, and this is the one thing I want you to understand if you don't take away anything from this video, is Shorting a stock can be completely dangerous and lead to indefinite losses if you don't know how to take a loss. So that's one big con of shorting a stock, is that you can lose indefinite amounts of money, and you can also lose money when the stock trades sideways. So now let's go to the advantages of shorting a stock. You make money when it drops. That's pretty much it. And I don't think there's anything else really exciting about shorting a stock. So one huge disadvantage, one small advantage. I just want to point out, if you don't want those unlimited losses and you want to make money when things drop, you can look towards options. I trade options professionally with my trading group, and with options you can have a capped amount of losses and still make money when things drop. Check it out in my videos. I also have a full trading course to teach you about this with the link in the bio. And the last thing I want to do is to teach you how to go short and what that looks like. So the first thing you want to do is identify a setup, some indication that something is going to drop, whether it's an index fund or it's a stock or it's Bitcoin. If you think it's going to drop, whether it's technical analysis, fundamental analysis, or we're just in a market that is selling and you're following that momentum, those could be all valid reasons to begin a short position. So once you have a plan and where we could be going, you want to know where your stop loss is, because like I said, infinite amount of losses, you really want to have an exit strategy if things go poorly. Once you have your exit, your stop loss, you want to figure out your profit zone. So where are you going to make money? What's your profit target? And are you going to get out at that point? Because this is all meaningless if you don't follow your plan. Once you have a plan, here's what you do to short the stock. When you go to your broker or you go to your trading platform, you type in the stock, and instead of the +1 when you open a position, you want to have that -1. It should say red -1 buy. So you're buying to open a short position. So now your account is going to have negative shares in it. Once you have negative shares in your account, you want to just wait. You want to wait to see if your stop loss gets hit or if your profit zone gets hit. You really want to stick to your plan and wait it through and see what happens. Let's say your profit zone gets hit. Here's how you close out your short position. Like I said before, you have to go on your trading platform, open up the stock, and then go to sell, but have a +1 on your position sign. So this is going to sell the position and close it out so you have 0, because right now you're holding negative stock in your account. So by selling a +1 position, you're going to have 0 positions in your account. That's the process of shorting, but like I said, the longer you hold, the more interest you're going to pay to your broker. So it's very important that this move happens relatively quickly. Lastly, I'm going to give you an amazing video to settle the debate of all time. Is trading better than long-term investing? I think you're going to love it. That's to the right of me. In the morning, trade the stock market for 30 minutes and make $100, $1,000, $10,000. It's limitless. But now begs the question, is trading better than long-term investing? That's what I'm going to answer in this video.